As you can see, I mean, basically what it looks like is we basically washed out off the open and then came down and tested the bottom of the range first. Which is down here like on an AMD or the SPY. So you like right around here is the bottom on the Qs. The bottom of the range is here, and I mean, you feel me? It'll vary variate. There'll be some variation from day to day. What I've noticed is sometimes you'll come down and test the bottom of the range first. Other times you'll be bullish right out the gate and go test the top of the range first. Unless there's some huge news or something like that, that's basically how it'll go. You'll either test the top of the range first, then the bottom, and then from there, basically you'll be range bound. So that's why normally in my normal process, what I like to do is not even trade directly off the open. I like to kind of wait 15 to 20 minutes, 10 to 20 minutes after market open to take a trade. That way we can kind of see a range get put in first. I'm not going to lie, especially recently, I have been kind of getting away from my normal routine. You feel me? But it's due to distractions. You feel me? I just got to remember to follow my plan my trades and trade my plans. You feel me? And I have been getting away from that a lot, just for the simple fact that, like I said, I mean, if you know, you know. I don't really feel like going into it. I'm gonna still, try to bring some value to the channel in any way I can. So right now, basically, what it looks like is we went up. They kind of did a fake out today because we seen a little flash of bullishness, and then we immediately sold off to test the bottom of the range and then rocketed up to the top. So basically, it was kind of like a fake out, dog. Like, I mean, we're testing the top first. That's what I'm seeing. But let's go ahead and let things develop. But as you can see, like, you see all this wicking up here on the SPY? See all the wicks up there? Then you got the same thing basically on the Qs. And again, from what I've seen, at least on the last 2 days, tech and then the NASDAQ, the Qs have been a little bit, or I would say even a lot weaker than the SPY has. And you could see it here as well. Look, the SPY is already above previous close, front side. The Qs yet to go front side. You feel me? And that's kind of the same action that we were seeing yesterday. And I mean, here's the S&P, I'm at the SPX, the S&P 500. And I mean, this thing actually rocketed up and went front side. And like, I was like, holy shit. Because the way I understand it, bro, like, we're still in a bear market. And all the big analysts or what have you are saying that we're going to go down and test 3,000 or 3,200. You have to take it with a grain of salt, but that does make sense, being that, we are in a recession and we are still in a bear market. I'll be interested to see let's see what bonds are doing. And look, it looks like bonds have bottomed down here, kind of put in like a haphazard double bottom, as you can see down here. Actually went up here, crossed over the 9 VWAP and my short term, putting in higher lows and trying to put in another higher low right here. Let's see if that trend can continue. But I'm gonna go ahead and pause it right here, bro. Like, all right, I mean, I'm back, bro. Just trials and tribulations. I mean, we're looking pretty bullish right now. One thing I will say is I thought I seen a gap up, like in pre-market. Was that a gap up or a gap down? Let's see. I guess a gap down. So, I mean, the prime example of why you actually need to be in the markets like way before market open, because if I would have seen that gap down, like that's information you need. You feel me? Like before you start trading at market open, because if if you see that we've gapped down a little bit, then you would know that there's a probability, like somewhat high probability, or at least decent probability that we, bounce and head to the upside off the open. If we gap down during pre-market, and then you have to also understand that the majority of traders don't trade pre-market, so they're waiting for market open to get in, and whatever plays they have. You feel me? So being that we gap down, you would expect a lot of traders and or the hedgies to be looking to buy the dip at least off the open, because if we gap, it's almost like the reverse of the washout. With market open, we wash out to the bottom of the range, and base down there and put in the bottom. There's a high probability that we bounce. It's just like testing the bottom of the range first and then heading to the upside. But we just gap down in pre-market. So basically off the open, we're already at the bottom of the range. And if you're just playing the ranges, obviously you would buy the dip to the upside at the bottom of the range. So I mean, that's a mistake I made here. Wasn't really privy to all the goings on pre-market. But I mean, the way I understand it, bro, like the S&P 500, bro, like the SPX, we're definitely gonna go down and test like 3,200, maybe 3,000. The only question is when. You feel me? Like it could be this year. I mean, there's not a lot of time left for this year, but definitely 2023. We're going down to test that 3,000 range, and possibly even lower, because even at 3,200 and 3,000, that's still not pre-COVID lows or the COVID low. I mean, the pandemic low. So even at those levels, it's still, you feel me? Like we'll still, it still won't be like as bad as it sounds. But look where we're trading at now. Look, the S&P 500 is up here at 3,800, bro. Now, from what I understand, we're going down to test 3,200, 3,000. So, I mean, probably wouldn't be a bad idea to grab some puts that are kind of like far out. You feel me? Because we're definitely going down to test those lows. Like, we're breaking through the June low, the newer September low, all that.